Ever felt overwhelmed scrolling through hundreds of mutual fund options, confused by buzzwords like large cap, mid cap, or AUM? Wouldn't it be amazing to have one concise document that lays it all out, like objectives, risk, holdings, performance, fees, in clear, bite-sized sections? That's exactly what the mutual fund fact sheet does. Is it worth a few minutes of your time to avoid years of regret over a poor performing fund? Absolutely. So if you want supercharged returns, you need supercharged information. So let's dive into the 5 key fact sheet sections that every savvy investor swears by. Hi there, welcome back to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. So first, basic information, your instant scheme snapshot. So before you commit any rupee, shouldn't you know the essentials? The basic information section is your crash course. First, fund objective. Are you chasing growth or aiming for regular dividends? Choosing the wrong path is like bringing a spoon to a knife fight. Next, direct versus regular plans. Lower expense ratios with direct plans versus advisory hand holding with regular plans. What's your style? NAV and AUM. A massive AUM sounds stable but could also signal crowded trades. Do you prefer agility or size? Next, minimum investment and SIP, STP, SWP options. Could a small SIP help you start today? Or do you want the flexibility to switch lump sums? And next comes exit load. Imagine getting a 3% haircut because you needed cash in 10 months. Wouldn't you plan around that? Next, risk level. From low liquid debt funds to high equity funds, does the riskometer align with your stomach? And picture this, you need liquidity in 3 months, but your low risk fund charges a hefty exit load if redeemed yearly. Oops, could that derail your plans? Checking this upfront is non-negotiable. Second section is the return performance. Ads love to flaunt 15% annualized returns, but what's the real story? The return performance section lays it bare. First, time frame returns. 1, 3, 5 year and since inception returns next to the benchmark index. Has the fund beaten the market or just followed it? It helps you to decide that. And also number 2, SIP returns. Would 1,000 rupees a month since 2018 have doubled by now? Seeing SIP growth helps you trust the power of disciplined investing. If a fund trails its benchmark in 3 out of 4 key periods, do you really want to believe last quarter's spike is sustainable? Consistency beats fluke. Always check before you bet. Third section is the fund manager details. So ever outsourced a project without meeting the contractor? Risky, right? Investing is no different. First, you need to know the manager's name and credentials. A superstar from a top B school versus a rookie fresh out of training. Who do you trust with crores of your money? Second, experience and track record. Has this manager delivered in bear market or only in bull runs? When markets roar, a novice may panic sell. When they dip, a pro spots buying opportunities. Isn't it crucial to know who's at the helm before you set sail? Section number 4, portfolio details. What's living in your fund? Do you truly know where your funds sleep at night? Portfolio details give you the snoop's eye. First, asset allocation. How much is in cash versus debt versus equity? A fund heavy on equities may roar in upsides but also plunge in downturns. Number 2, top 10 holdings. Those big names you have heard of. What percentage are they of your fund? If tech stocks dominate, are you comfortable riding that wave? Next is sector exposure. Does your fund bet too heavily on one sector? If auto or banking hiccups next, will you stumble too? Next is the debt instrument. For debt funds, know the credit ratings and maturity profiles. High yield but junk rated papers can blow up. Are you ready for that shock? Imagine thinking you are in a safety first fund only to find it's loaded with sub-investment grade bonds. Checking these lines is like verifying the ingredients before you eat. Section 5 is key ratios. So some ratios pack more punch than performance charts. First is the expense ratio. Every basis point spent on fees is a basis point not compounding for you. Would you burn money on hidden charges? Next is portfolio turnover ratio. A churning fund can increase increased trading cost and tax liabilities. Do you prefer stability or turnover? Next comes beta. If a beta is 1.2, fund swings 20% more than the benchmark. Can you handle that extra volatility? And another thing is a Sharpe ratio. How much return does each unit of risk earn you? A higher Sharpe means smarter risk taking. And also next comes tracking error for index funds. How faithfully does the fund mimic its index? Small error means small slippage. Two funds might both return 12%, but the one charging 0.5% fees and delivering a 1.2 Sharpe ratio is a no-brainer over the one at 1.5% fees and a Sharpe of 0.8, right? Next comes how to use exit load to your advantage. So exit load aren't just fees, they are planning tools. So know your timeline. If you need liquidity in 6 months, avoid funds with steep yearly exit loads and strategic partial redemption. Some schemes let you redeem up to 10% in the first year without load. Could that serve your cash flow needs? And another thing to know is match horizon. So align your investment to the exit load schedule to avoid penalties. Why pay 2% extra if you can wait another year? Exit load planning is like booking a flight in advance to save on last minute fares. Small planning but big savings. And when and how often do you review your fact sheet? So would you drive a car for 100,000 kilometers without a service? Then why ignore your investments? First, before you invest, confirm objectives, fees, and risk. And every 3 to 6 months, market shift, fund managers may rotate, and top holdings may change. So stay updated. So regular check-ins let you catch underperformance early and double down on winners. Isn't that proactive investing? And what is the final takeaway from the video? Let the fact sheet guide you. If you want good returns, stop relying on guesswork or hot tips. The fact sheet is your ultimate cheat sheet, covering basic info, returns, manager bio, portfolios, ratios, and exit load. By mastering these sections, you are setting yourself up for smarter choices and stronger profits. And when the detail overload hits, remember, a certified financial planner can translate these numbers into a tailored strategy that fits your financial goals, timeline, and risk appetite. Why gamble with your money when you can invest with certainty? So open that fact sheet now and let your mutual funds work harder and smarter for you. Are you ready to decode your mutual fund fact sheet and make smarter investment decisions? Then don't just rely on hot tips. Get the clarity and confidence you deserve. Click the link in the description to schedule a free consultation with one of our certified financial planner today. Let's turn your investments into informed, strategic wealth building tools. And if you found this video valuable, give it a like, share, and subscribe to our YouTube channel. Until next time, thank you for watching.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.